What's up guys, welcome to the channel. So I'm at FinCon 2022, it's a financial conference for content creators, and I had the privilege this week to meet two of these creators who are also tax accountants. We have Chris and Jeffrey with me today, or actually goes by Jeff. They also make their own content, and we'll get to shouting that out in a bit, and I'll definitely leave all their links down below. I ran a poll on Twitter asking if I should ask just general questions about Veve NFTs, because Jeff here has actually bought NFTs on Veve over the past year, and Chris also has bought other NFTs, so I just thought, why not ask them some general questions? Now, of course, as in every other video, nothing in this video is financial advice, and when it comes to taxes, you really want to talk to your local tax advisors on your state regulations, on your local regulations, and these guys would know a lot more. This is more just fun, general questions that I'm asking these two. So again, like, don't take this as like, oh, well, I'm just going to do those things. Like, definitely go talk to your locals. That way you make sure you're down with all the recent tax laws. So first off, I just want to thank you guys for being in this video today. It was great to meet you guys. We're all working on this little mic, but I'm going to introduce yourselves.
So I'm Chris, working with MMG. We're both partners.
Yeah, and my name is Jeff, and I have MMG, Money Millennial Group. It's a tax and accounting business where we do taxes, bookkeeping, and business formations. And we have our own little YouTube channel, and then like our personal brands on Instagram, and the whole shebang, basically.
What's the YouTube channel name? I'll have it up right here.
Oh, awesome. Thanks. So it's Chris and Jeff Finance and Business Videos.
Cool.
And we mainly talk about like the mistakes that we've made as small business owners. We're just starting off. We only have 2 years running our business, but we are profitable. But we have made mistakes, and so we talk about like the kind of things that you should try to avoid. But we're recently going through a big rehaul with our videos too. So.
Awesome, thanks guys. So I'm gonna pull up my phone here just because that's where I have all the questions on. I'm going to shout out who asked it and just go ahead and ask the question. So again, these are specifically over Veve, but whichever one of you feels like you want to tackle that question, feel free to. So let's get into it. If the U.S. government wants to tax the gains, are the losses a write-off?
I can take that one. Yeah. So I mean, as far as investing in almost any asset, any gains that you have in that specific asset, you can also offset by writing it off. So like, for example, I'm sure that you've probably heard a lot about like tax loss harvesting.
Yes.
Within crypto, which is essentially where you buy something, then it drops in value, and then you sell it, but you still believe in that asset, so you repurchase it. You don't have to wait like 30 days to not trigger the wash sale rule. But let's say, for example, if you do have a lot of gains and you have some crypto that you no longer believe in either way, or even NFTs in general, you can just sell those and it'll offset the gains as well. But the caveat here is that if you do want to, like, let's say for example you have your W-2 income or your 1099 income, and then you have a pure loss, there's no net gain in your NFTs or crypto or specific asset space, you can't write off other income, if that makes sense.
It does. Yeah, that definitely makes sense. And I'm assuming if you did this, let's say with like Veve particularly, you would have to sacrifice some of your treasure mint numbers.
Oh yeah, exactly. Yeah, that's like the main thing about in the NFT space, that if you do want to tax loss harvest, you're essentially sacrificing your mint number at that point, because when you do repurchase, you're 100%, like, odds are you're not going to get the same exact mint number.
You know, that sucks for the rest of the space too, for like PFP projects, because that could be that PFP that I really resonate with, but I'm so down and I just don't want to, I don't want to have it anymore, so I got to cut that emotional tie with an NFT, so that's a tough one. We'll move on to the next question. I do think I lost that one. Okay, so that was by Giri. And the next one is by Crimzone Carmine. How are NFTs classified currently? And I don't know if I stressed this at the beginning of the video or not, but like, you guys do focus more on like small business tax advising. This is just like a fun random questions for two tax accountants. So like, it's okay if like you're not sure on some of the questions, but would you want to tackle that one, or?
Yeah. So what was the question?
How are NFTs classified currently?
So I just to be super clear here, I am the one who's focused in real estate in the firm. Jeff has the most experience, but I guess I could say right now, NFTs are probably just going to be classified as crypto. And crypto, they're taking a lot of, like the way they're creating those rules, regulations, that's all coming off of stocks because it's been around for forever, right? And for at least 100 years, and people have been doing that. So, I mean, I don't think it's really any different right now. It's really just the same thing as crypto, which is
Gotcha.
I guess the tough part is like what you guys were saying, where crypto you can sell it, buy it, and you can't really tell which coin you're really selling, or buying. But with an NFT, you have the mint number, and now you're losing that specific mint that you're like so close with.
Yeah.
But yeah, to add to that too, like Chris was saying, it can be classified as crypto, and I feel like it really depends on what it is that you're actually doing with the NFT. Because I know that some NFTs you can actually stake as well. So it goes from a non-fungible now to like a fungible asset, where like you're staking it for like something. Like for example, right now there's tykes, and then you can stake your tyke, and then you can stake it for Tide coins. And so now it's going from non-fungible to fungible. And I think in that situation, I believe that the NFT would be classified as art, and it would be taxed as like almost any other art piece as well. So it's kind of like, let's say for example, like these billionaires are buying a bunch of art right now, or they have been buying all this art, and they make a profit off of the art itself. It's going to be taxed as if it were an art piece essentially, and so NFTs would most likely be classified in that sense too.
Gotcha. Yeah, I'm staking a few NFTs. One in particular was my first Solana NFT, which is like the broken blockchain that people like to joke about. I had Zunies, and when I stake my Zuni, I get Potion token. And that Potion token sounds like a security all day long. That Potion token allows me to buy raffles to win higher valued NFTs. So I have this like passive income of this fake currency to help me do. Eventually, it'll be integrated in their gaming system and other stuff.
Nice.
It's pretty cool right now.
Actually, if I can add to
Sure.
that, exactly what you just talked about is what makes crypto and NFT stuff, or anything really on the blockchain, such a complicated thing. Because again, it's like the whole, if you have an NFT, it's treated as art, but as soon as you stake it, whatever you're getting out of it is going to be treated as like crypto. And I know that it's most likely, and there's no regulations right now, that like the IRS is not giving us any sort of guidelines on all of this stuff. I mean, granted, they can't even keep up with like audits on small business owners, much less this niche space of like the blockchain. But when you do stake something, I would imagine that you would have to pay taxes on whatever value it is that you staked it at. And then whatever gains that you get from staking it is going to be taxed as crypto. So it's not even that it's necessarily going to be taxed, it's just NFTs, and then even though you staked it, it's that a transaction happened, and then if you use those Potion coins to buy other NFTs, then you're creating another transaction, which creates another taxable event, and it becomes so complicated, especially if you jump back and forth.
Yeah, absolutely. I always joke around about like how I did pretty good in January and about how the IRS is going to come knocking at my door, and then I made the mistake of buying the lenticular cards on Veve, and it just like killed my portfolio. I went down so much. I bought that goofy card for like $3,500, and it's worth like $200 right now.
Oh,
so
God,
it's like they're going to come knocking at my door. They're going to owe me money now.
IRS agents are running that stuff.
Yeah, I'm just kidding though. So I'm gonna skip over a couple questions because this is really relevant to what we're talking about. So like as you said, like the NFT taxing just becomes complicated. One of the questions in here, which is also a question that I would have, let me see if I can find it. So this person regarded this obviously in like VB context, but this could be general as well. Random question: when we can burn NFTs on Veve, would that be considered a capital loss if we burn them for something other than gems or another asset? Basically, can I burn to offset my gains?
Oh yeah, you wanna?
No, I don't.
I mean, honestly, this is a part that I still don't understand
of course,
of like NFTs or crypto in general. But I mean, maybe this might be a little bit of can shine a little light on it. But whenever you're converting between two types of cryptos, there's always going to be gas fees. Those gas fees are always written against the gain that you have. So let's say, for example, you went from Bitcoin to Ethereum or vice versa. If the conversion was perfect and there was no loss in that transition, then essentially you have a loss because just from the gas fees by themselves. And I would imagine that it's the same thing with the NFTs, where if you do start burning them, then I don't even know if that's the right term.
Yeah, it is.
You would have bought it at a certain price, and then when you start burning them, they probably had a different floor price. But I think the main caveat here that's very difficult to know how it can be taxable is the actual value of the NFT. Are you going off of the floor price?
Yeah.
Are you going off of the mint number?
Yeah.
Are you going off of like
special mint?
Yeah, like the utility that it still has, because I know that some of them have like I guess a limited utility. After a certain point, they have no utility. It's just like a piece of art or whatever. So yeah, there's so many like things around it that it's very difficult to know. And yeah.
Yeah, so it gets even immensely more complicated than that. If you're in the tax and accounting, I feel like if I was looking at crypto, I'd want to run away from questions like this, because the CEO of Veve is David Yu, and he mentioned in a recent interview that actually came out last week that there's going to be utility to mass burn comics in exchange for like 1 of 10s or like 1 of 20s. So in other words, if you have, he just threw out a number, if you have 50 Fantastic Four #1 comics, you might maybe burn those 50 for a special 1 of 10, like the first people to burn those 50, get this 1 of 10. But now it's like, well, what was the initial value of the 1 of 10? Did I technically sell those? It's
right,
it's
exactly.
Man.
Yeah, it's very difficult.
Yeah. Oh man, I don't. My local tax accountant that runs my taxes for my business, so I told him some of this stuff. Whew.
Yeah.
He'd hate me. Yeah, of course.
So there's a couple things I do want to mention. Like I said before, they're going to use a lot of the assets that are around now, like real estate, art, stocks, to create these rules. So I would get familiarized with those rules. And then on top of that, one thing you can do, I think this applies really to anything, is always track everything you do. So like gas fees, where you bought it, when you sold it, for 2 reasons. One, you want to know, just so that you can have data, right, make better decisions. But 2, it's when you do your taxes, one thing that Jeff was encountering for a while, we had this one client, and I think I mentioned this to you, Chris. He was trading, and he works with stocks, but again, similar to crypto, he was doing tons of trades, and then we come to find out that his cost basis was super different, and there's like things like FIFO and LIFO, like first in, first out. All those things come into play, but you can really only like know that there's a mistake in the tax forms you receive from your brokerage if you have your own data to compare it to. So that's where you can be like, okay, they're telling me that I bought it at this, but I really bought it at this. And that might not seem like a huge deal, but then come tax season, they might be telling you, hey, you owe $200,000, like our client, and then we sit down and look at the real cost basis and all the other numbers, and we come to find out, like, no, you actually owe only 50, and that's how you save a lot of money. And with crypto, I mean, you could blow up, like, have that one crypto or one token, or whatever it is, NFT, just blow up in value, and you're, I don't know, overnight millionaire. Yeah. You want to make sure that that's tracked, right? So I know you probably have a bunch to say about that.
Oh yeah, I mean, if it's true in the stock space, it definitely will be true in the crypto space. And this is a service that we used to offer and no longer offer it just because of how difficult the task is. And but in the case of stocks in general, whenever someone issues you a 1099, oh my god, I forgot what it's called, a 1099B, the brokerage themselves is essentially giving you this as a result of their own tax filings. And they have certain qualifications or requirements by the IRS that are very different from your 8949 / your Schedule D. And the Schedule D is essentially where you report like your stocks and your crypto and all of these different assets that are it's like very liquid assets essentially. And when they issue you that 1099B, they even say it at the very bottom, don't use this as tax advice. In other words, don't use this as just like, hey, hey, this is what my gains were, this is what my losses were, this is how much I owe. I mean, this is my taxable gains, essentially.
Yeah.
You definitely have to run numbers against it, because in our situation, we've only taken in like 4 clients, but again, those were so difficult clients to handle. But one of our clients went from owing $50,000 down to only owing like $6,000, and it was because we reconciled his transaction history behind all the stocks that he had traded throughout the year, and there were a lot of wash sales that he had triggered, and then there were also a lot of like deferments that he had triggered. Essentially, essentially at the end of the day, the numbers that were calculated based off of the requirements for the brokerage were way off, based off of the requirements that the taxpayer owes on their taxable gains.
That's good information. I'm going to move on. There's quite a few good questions here, but of course, for respect for your time, I'm not going to be able to get into all of them. I'm actually going to ask a personal question, something that I think I asked you guys the other day, but I'll try to make it more clear. So this is a question that always comes up for me, and again, whoever's watching this, go talk to somebody locally. I don't want anybody to come back and be like, oh, I saw on Chris's channel that this is said, so I'm going to take this. So I sold some things in January. I'm very upfront about it. In January, Veve had no cash out option. So what was the value of a gem? So if you sold an NFT on the Ethereum blockchain, you owe the US dollar equivalent of that Ethereum. And not only was there no way to cash out in Veve in January, the only way I could have possibly cashed out, which I didn't do if you're watching this video, but other people did, is you had to go to the black market. In the black market, the gem rates were from 0.35 to 0.5. So was my 100 gem value on Veve $50 gain, because that's all I could realize out of it? Because the only basis I had for the gem being 1 to $1 is Veve's word at that time, but we weren't able to cash out for 2 years. So what's your thoughts on that?
I mean, in this case, I feel like a lot of people look at the IRS as like this big institution who knows what everything is, how to handle situations like this. But in reality, it's typically that if you want to go through this, which I would say try not to, definitely try to go with someone who is willing to do this, especially if you have like crazy gains. I would make sure to pay someone a decent amount just to put in some effort, because if it becomes a very difficult like taxable event and taxes are filed incorrectly and you are triggered with an audit, you are typically are talking to an IRS agent, and then you're trying to talk about this whole situation essentially. And the more documentation that you have behind it, the better you will be suited in a case of an audit. But if you really want to like get into the nitty-gritty of it, I guess, which I still don't think it's worth, because if they're not putting in the regulations for it, I would only just document for my own personal benefit, quite literally, because Uncle Sam has his own agenda. And just document as much as possible. In this case, like if you're selling it on the black market, document what you cashed it out as, and document how much it costs you to buy a gem. And then at the end of the day, everything is going to be tied back to the US dollar. Just because like at the end of the day, the IRS, the tax code is built in a way, actually the tax code is built off of an honor system. So like let's say for example, I am a business owner and I have my employees and I give them a W-2 or I give my contractors a 1099. I have to file taxes, and the reason I file taxes is because I want to offset my W-2 expenses and offset my 1099s. And so when I file my taxes, I'm like, hey, Uncle Sam, don't tax me on this W-2 salary because I passed it off to John Doe, and they owe taxes to you. And so when I report that, now the IRS knows, hey, Jane Doe or John Doe owes me money. And then they go to them, and then they're like, okay, they didn't file a return. That's when they issue out like a notice. And so the IRS is not going to necessarily know everything that you do, but if you do get their attention, for sure they're going to have eyes on you.
You want to talk slightly about MGM real quick? Like, do people have a link they can go to like check you guys out? Like, you gave your channel shout out, but what about your business?
Yeah, I mean, we have mmg.taxloan.com. It sounds like a little bit of a weird URL, but it's because that is TaxDome is actually our servicing pipeline or our service software. That's basically where we can actually talk to our clients, sign contracts, get paid, fulfill our services, and do everything all in one platform. Awesome. It makes it so much easier for us, so much more efficient for our clients as well.
Do you guys want to say, Chris?
Yeah. So I do want to add, you can also find us on IG at Money Millennial Group. But if you want to even message us personally, that also works. You can message Jeff at Calculate with Jeff or me, Finance with Chris Vera, and we'll just send you a Calendly link and we can talk.
Sweet. Thank you, guys. Is there any final thoughts over the NFT and crypto space as far as taxes are concerned, or anything else that you'd like to add to this conversation?
Do you want to go? Or?
Yeah, I mean, I guess, again, this is not like my strong, like NFT is not my main focus, but I would say just bookkeeping and tracking everything. Like the more you can do that, the more power you're going to have, the more like you're going to have data for yourself, like Jeff said, you can make great decisions and then also protect yourself from the IRS and all this other stuff. But I cannot stress that enough. Please, bookkeep.
Awesome.
Actually, relating back to what Chris was saying earlier, I 100% agree that if you're struggling with like NFT taxable events and like crypto taxable events and everything like that, like use what is already in place and what's already being regulated, which is like stocks and real estate and other taxable assets that have very clear guidelines as far as how they're taxed. Because if you guys are already learning about like NFT, the blockchain, crypto, that stuff is so complicated. I started off with that and then I got into real estate and I realized real estate is so much easier just because there is that regulation. But if you understand that, you can start translating things together, translating things over into the blockchain space in general. And honestly, like if you're already online and you're doing research anyways, the more you're informed, I mean, the human brain is such a capable, like it's an amazing organ that we have, and you can connect so many dots and you can start realizing, hey, like maybe like it's the whole, if a business wants to pass on the tax liability to their employees, IRS is not going to know that unless you tell the IRS. Knowing that, it can give you an idea of like how you might want to be tracking your stuff in crypto, where you're like, I mean, if this was all in the black market, how is the IRS going to know? Mm-hmm. Type of thing. So, yeah. Like that's what, like you can make those connections, even though it has nothing to do with NFTs or crypto. You can use information in different asset spaces to figure out like what it is that you can possibly do. And just being informed and going in blindly, like to a tax accountant who does specialize in this, which I feel like are very, very few people. Yes. You at least want to have a good understanding, because the last thing you want to do is like give them the full control of like how they handle this whole situation. You always want to go in with some sort of information. Yeah.
Sweet, thank you guys so much. I will leave Jeff and Chris's information down below on their business and also on their YouTube channel, which you probably saw at the beginning of the video. Be sure to give them a subscribe. They make financial related content. I think actually kind of changing up soon some here lately, but their quality is amazing. Their editing is great. So go give them a follow. We'll see you guys next time. Peace out.